Broadcasting from beautiful, tropical Vero Beach, Florida, it's Money Nation with Ed Gardner.
Good morning, everyone. Welcome to Money Nation. Today we got special guest Joe Cunningham from Worldview Capital with us. Joe, good morning.
Hey, Ed. Happy 2022. Good to be on. Appreciate the opportunity.
Looking forward to talking to you, hearing your what you think's going to go on for the new year. We had a good year last year. Tell me what you thought about the last year, and why don't you sum it up a little bit, and we'll chat about that to start off. How's that?
Well, sure. I think, Ed, frankly, from your perspective as a money manager, stocks were up blistering 27%, the S&P for last year. And, that's just got to be good news all the way around. So I was looking at what that means and contrasting it with some other indicators. And I can report, Ed, that you as a money manager, I'm sure it was up much better than the hedge fund industry, which was up only 8.7%. So I think, if we're in index funds or doing ETFs or buying individual stocks, we all did better than the hedge fund market, and that makes us superstars. So congratulations.
Yeah, it was a good year. So where do we want to be in the new year? There's all kinds of people talking about possible problems that could derail this year. Here are the top 10 off of Money Manager this morning. No zero COVID was one thing you talked about. U.S. midterms, China, Russia, Iran, 2 steps greener, 1 step back, Turkey, all kinds of things that could interest rates should be on that list. I'm not sure why they're not, but what do you think about the new year? What are we looking at?
So one area where I would start is the dollar index, which is not on the list. So the dollar index is up quite a bit in the last, since October. It's about 96. It was drifting down, and that was making our exports a little more competitive. Because remember, we have a tremendous trade balance, and that trade balance has to be financed by foreigners purchasing U.S. securities. And that's been an impetus for the stock market's increase, and for support the bond market as well. So if the dollar starts getting more expensive, those exports are going to get more expensive, and we'll be exporting less, importing more. Our trade deficit is going to get worse. It's not a virtuous cycle. So we want to see a little bit more on a trade weighted basis. A more stable U.S. dollar than we're seeing right now. Now, usually when the dollar goes up, the gold goes down. We didn't see that this time. So gold's been holding about 1,800, right? Maybe some of that money's going off in crypto, which might be a theme also on your list, institutional investor list, because the crypto markets are going to coalesce around some regulatory or quasi-regulatory or self-policing type of regimes, which I think will give them a little bit more credibility and may impact the gold market negatively.
Hold that thought for 1 second, Joe. It's interesting when you go try to buy gold and silver right now. The premiums on the commissions are unbelievable. I think what's silver today? $20, 21 an ounce.
Yeah.
To buy a silver American Eagle, the silver coins they sell for 1 ounce are like $28, $30. It's like $10 premium over the price of the actual metal. So that's what people are paying. And I think on the gold coins, 1,800 an ounce, they're paying like 7%, up to 10% more on American Eagles. So it's interesting where the price is where they are, but seems like people are paying more for them, I think they should
they're paying more because they can get more, and they're getting more is because people are concerned, right? Yep. So the premium on gold is always going to be a function of risk. And there's some risk going into 2022, no doubt, that COVID being first amongst equals, or more so. But let me just touch on COVID for a moment, if I may, because I'm on the board with some real smart guys in pharma companies, and one's a PhD biochemist, immunologist, wrote the book on COVID, and he has equated. He's done the math that this particular strain, of COVID, is about the same as getting the flu in 2018. So if you were worried about dying from the flu in 2018, which you shouldn't have been, if you're healthy reasonably, then you're looking at about the same risk profile with the Omicron variant. So this, I think, is going to peter out by the end of January, maybe mid-February, and we're going to get into a more virtuous cycle for life. Okay.
Yeah.
Where we're able to go out, enjoy ourselves, and not be, freaking out. The media's, way overboard on some of some of this stuff. And, now they're talking school closings and other things. And what are we trying to do here? Why we shouldn't close anything.
Exactly.
It's ridiculous. So, we're keeping an eye on that, but that was really encouraging. Hugh did the numbers just yesterday and, shot that over to my inbox, and I was just, thank you, God, relieved that we're, on the tail end of this and not on the front end. So let's say that that's correct. That's an assessment that we can live with. That means that if the U.S. economy starts to really move forward in an uninhibited way with COVID, then we could see a bit of a boom here, which would likely then result in a little bit more inflation, right? So you've got the Fed tapering; they're cutting their bond purchases by 20 billion a month, plus agency purchases by another 10. So that's 30 billion that's not going into the economy, right? Still got a lot of money chasing stocks, but the tapering is going to be over, say, March, April. And, we'll get on to a little bit more normalized Fed cycle. And that's a good thing, I think, which could mean interest rates would go up a little bit. But, when you're at zero, going up 50 basis points shouldn't be a big deal to anyone. The savers should be rejoicing that we'll finally get a little something on their savings accounts. So that's an interesting element. Now the inflation thing, though, here's the thing. Now, and how I look at inflation. I use the tips, and the tips are behaving normally. We had a little bit of a sell-off in the Treasury market yesterday, but that was because people were taking risks out of the market and going into Treasuries before the holidays. So the Treasuries had, the price had gone up a good bit, and the yield had gone down prior to the holidays, and now we're reversing that. Okay.
How are the tips compared to, hold that thought, how are the tips compared to 6 months ago? We talked about this, and that was the indicator we wanted to follow. What's going on in the 6 months?
Favorably.
Okay. We like to hear that.
Yeah, we're at about 283 on the 5-year. We were at about 260 before when we spoke in, I think it was April, about this the first time. We did see it run up a little bit in the fourth quarter. Early in the fourth quarter, it was like over 3, but it settled back in, and we want to see it range bound. We don't want to see anything crazy. But the issue here is what's driving the inflation? Is it expectations? Are people just assuming, like, if you're going to go out and buy a car sometime this quarter,
if you can find a car right now, you
were
news.
If you were going to go out and buy something, though, and you knew it was going to be more expensive tomorrow, you'll buy it today, right? I mean, that's just common sense. So inflation expectations have as big an impact as the actual macros that are driving the market. So a textbook, what I see is this is more of a supply issue, right? We've got all these supply backlogs and all this other stuff that's been going on, and we're all in the news. We all know this. So the economic textbook answer to that is to do absolutely nothing and let the market sort it out, right? Which nobody ever wants to do, because policymakers have to do something, and economists have to comment on things, and the news has to report something. And when the reality here is just do nothing and let the market sort it out, and goods will get produced and they'll be shipped, and shipping will be fine, truck drivers, and stuff will happen, and the market will normalize. So,
what about people's perception here that, you look at prices of gas and prices of food, people think that there's crazy inflation, although we don't see that in the numbers. What's your thoughts on that?
Yeah, so gas is up huge, right, last year. So why is that? Here's my diabolical thinking for gas prices. They can't get you in an electric car at $1.50 a gallon, right? And now it's not just the government. The car companies are electrifying. And so they need people buying electric cars, and they know, and look, cars nowadays can run 150, 200,000 miles, no problem. Right. And they know at $1.50, you're not going to buy a gallon. You're not going to go out and get yourself an electric car because the economics aren't there. Right. You still got to charge the car, and all these free charging stations are going to start to go away, and you're going to be paying for that. Right.
Yeah, definitely.
So I just see, and OPEC's coming out today. They're going to come out and say and increase modestly their expectations because supplies are low and oil's hanging around, that $75, $76, $77 range it's been in for a good long time. So, we're probably not in a bad spot for oil, but I am convinced that the governments and the energy conglomerates, if they're going to get you in electric cars, you're gonna have $3 gas.
Yeah,
you just are. So that's kind of where that market's going.
What about your thoughts on the pipeline being shut down? How much did that influence the price of oil going higher?
Depending on which pipeline, the one that is in the news is the one that was going across the Dakotas to the Great Lakes. And that was coming out of the sand oil in Canada, which is particularly nasty. So the question I had at the time is, why isn't Canada building a pipeline to British Columbia or to Toronto? And they wouldn't let them. So they said, we'll just take it down through America. And now that's not happening. So they got a bit of an issue, and they're going to have to sort it out. Look, in the meantime, it's hauled around in train cars, which can't be the answer. I don't know if you remember, probably 4 years ago, that train derailed in Quebec and burned the whole town down.
Yeah, I remember that.
Yeah, real nasty. So that can't be the answer either. And they're going to have to figure it out. I never bought the argument of the jobs and pipelines and doing that sort of thing. Sure, there's jobs there, but they're transitory. Those jobs are going to come. They're going to build a pipeline. They're going to go somewhere else, right?
Yeah.
So it would be nice. And the aging pipelines we have now, definitely a problem. So there's just going to be a lot of noise around the issue because there's noise to be made. And I'm not going to pay a whole lot of attention to it unless it really starts to impact our own domestic supply, which it probably is at the margin. Little bit right now.
All right. Hey, Joe, we're going to take a quick break here. Remember, listeners, any questions at all, feel free to give me a call at 518-255-8854, or you can email me at edgardner@cutterco.com. We'll be right back.
All opinions expressed by Ed Gardner and or his guests on the Money Nation show are solely Ed Gardner's and or his guests' opinions and do not reflect the opinions of Cutter and Company or any of their affiliates. You should not treat any opinion expressed by Ed Gardner and or guests as a specific inducement to make a particular investment or follow a particular strategy, but only in as an expression of their opinion. Ed Gardner's and his guests' opinions are based on information he considers reliable, but neither Cutter and Company nor affiliates and or subsidies warrant its completeness or accuracy, and it should not be relied upon as such. Always talk to your financial advisor before making such decisions.
Welcome back, Joe. So what else you thinking about today, Joe? Second day of the new year, 2022.
Yeah, that's interesting.
Wait, first of all, let's talk about the snowstorms in Virginia. Did you see that? People are stranded 12 hours, 14 hours. I was actually home in New York for the holidays. And what a difference, Vero Beach in New York. I was out at Mr. Manatee's last night in Vero Beach. Everyone seems normal here. You go back to New York, it's not normal. And but with that said, everyone had COVID at our Christmas party. No one was sick. Not one person had any symptoms. It was like the best flu you could have ever had in your life. It was kind of weird. But with that said,
I had COVID early December, and I had the Delta variant, which is why I've got a little goatee going here. This is my I had a COVID beard, which I pared down. But it was pretty bad for me. I got knocked right on my back, and that was the Delta, and that was a little scary, I must admit. And I'm vaccinated, and I just thought, okay, it took me probably 3 weeks to fully recover, where I could actually get on a treadmill and run, 2 miles and not feel coughing a lung up. But so one thing, just weather related, and personally, is it was minus 11 degrees here over the weekend, and my pipes froze in my kitchen.
Really?
So,
Inside the house?
swear to God, man, that was a first too. It's like, how did this happen? And so we had to. It took 36 hours for it to melt out. So I'm not particularly happy with my insulation at the moment.
They said one of the senators from Virginia was caught in the storm for like 15, 16 hours. Can you imagine sitting in your car, not being able to move for, like almost a half a day or longer, and that's pretty incredible.
Well, plus you got to have gas, and you got to have the food and blankets and things like that. And frankly, in Minnesota, we have there's a blanket in my car, and there's an extra pair of gloves, and there's some hand warmers. So we're kind of think that maybe that's my wife. Okay.
Yeah.
But
a responsible one.
So let's take a quick trip around the world, because one of the themes as U.S. equities moderate to a degree, and they probably will. We think they will. We'll likely not see 27%, but we might see something close to 10% going forward here in 2022. Still a lot of money chasing stocks, but your clients, Ed, and your investors, they might want to consider diversifying overseas. And there's some positive stories happening in the global markets, which we follow because Worldview Capital. That's kind of what we do.
Yeah.
Japan's looking kind of interesting to us at the moment. Taiwan Semiconductor, I know I can't recommend a stock, and I'm not. I'm just saying that if there's a semiconductor shortage, find a semiconductor company, and that one looks interesting to us as a potential play. And we don't own it; we had nothing to do with it. So I'm just saying it's one. We're like, who makes semiconductors? If there's a shortage, let's find them. We knew they were in Taiwan, and that's one of the reasons that China won't be invading Taiwan in 2022.
That's your thoughts there, yeah, because that's all they keep talking about.
Yeah, exactly.
Invasion of Taiwan, and they were talking about that again today.
Yeah. Now look, and we've discussed this in private before, but I know that the U.S. is building a tremendous infrastructure in Asia. When we left Afghanistan, we ran to Guam and we ran to the Philippines, and we started building in earnest, right?
Yeah.
So they are putting up infrastructure, buildings, housing troops, running maneuvers, which is fine. I mean, that's what armies and navies do. What I'm interested in from the U.S. Military perspective is more of an asymmetrical warfare against, say, a China or a Russia, right? So China, for example, in the South China Sea, they've got 300 fishing boats out there at any given time, right? Now, they're not all fishing boats, but it's a contrived way of controlling the waterways by just hitting it with boats, right? That's asymmetric warfare.
Yeah.
That's nobody's firing a shot, nobody's doing anything, but you're owning the territory. And the U.S. needs to be a little bit more nimble. I think probably Afghanistan and Iraq, if anything, I hope it taught us that there's value in using local forces and having more covert operative elements in the theater than maybe you would think otherwise. In other words, we don't have to have a heavy footprint to be successful. In fact, we've just proven you probably won't be. So that's
what's your thoughts on Russia? And there's all kind of talk about that today, and they're on the border, and I think one of the politicians today said he thinks it's going to happen. That was in the news today.
So who's in? First of all, you have to look at the expansion profile and footprint of NATO and ask yourself, why are we pushing up against Russia? Why, if we have the our sphere of influence is North and South America, Russia's going to have their own, China's going to have their own. These are not unreasonable things. Now the Ukrainian people seem kind of split on push to Europe or push with Russia, but the fact is you can't be at war with your neighbor. You got to find a way to trade, and borders. My old graduate school, the theme was borders to see trade seldom need soldiers, right? Hey, good idea. Let's start. Ukraine's got to be a little bit more pragmatic on the trade side and find a way to work with Russia. And Russia's got to stop being belligerent. Now, Putin asked for that call with Biden last week. The call only lasted 50 minutes. That was my concern. I would have liked to have seen a more substantive discussion between the two leaders. They're setting it up for underlings to do their thing, but still, with translation, that's a 20-30 minute call. You know what I mean? But the fact that Putin asked for it might mean he's looking for a way to walk this thing back, right? So you can keep troops around the border. Who cares? As long as you don't, and that is a hot zone. I mean, they're fighting every day, low level intensity, but there's fights going on every day. Yeah. So that's certainly worth watching. And Belarus and Russia still control the natural gas going into Europe. So there's got to be some, they're going to be doing the dance, right? They're going to try to figure out how to keep that going, keep the trade going. Russia needs the money. They don't want, wars are expensive. The sanctions will be impactful. Things will not never go the way you hope they might when you have a war, right? I mean, there's war plans and then there's day one.
Yeah.
Get a new plan. But one of the countries I wanted to mention now, there's a couple. One is Indonesia, which has done a fine job. And so you look at the ETFs, or these country level funds, they've done a fine job of doing value-added services for their mining industries. So instead of just exporting to, Australia or to China or wherever, they're actually doing some value-added refining. That's one. The other one is in Europe is Portugal. I'm really big on Portugal, not just because I want to move there and drink their wines and eat their food, but because they've done a fine job of extricating themselves out of the tricoid, which is the European Union, IMF, European Union, European Central Bank manner of controlling them. So they were able to extricate themselves from that. They've done a fine job managing the economy. They've got a lot going for it. So that's one of the countries we're looking at. Ireland's another one. The UK we're not so keen on for a variety of reasons. Italy, we would love to love Italy, but we just can't.
No love there.
Try it, we might. So we feel pretty good, globally that pick and choose your.
Are you looking more the blue chips, or are you looking more emerging markets? Well, I guess Indo's emerging markets, but
yeah, those are the emerging markets. From the blue chips, here's a theme that I came up with. That, remember back in the 80s, if the saying was if IBM goes below 100, buy it. Right? Do you remember that?
Yep.
Yeah. So now it's kind of like if Tesla drops below 1,000, buy it. And it has that volatile, trading pattern that can make it look a little bit more interesting to trade than some other stocks. And the other thing is with some of these big tech stocks, buying the long dated out of the in the money options probably is something that you could make a little bit of money on. You know where I got that idea from?
Where'd you get that from?
Nancy Pelosi.
That's pretty funny. I didn't know you take her advice that often, Joe.
It was reported in the news that she and her husband were buying long dated in the money options. I thought, well, if Nancy's doing it, there's probably something to it.
Good thought pattern there, Joe. Anything else closing here? We got a couple more minutes left, Joe. What else you thinking is going to be news for the new year?
Well, I think the school closings are still grating on me. So I'd like to see some political will at the top to reverse that. It's an election year, so the question is: are we heading into a gridlock next 2 years, or what are the probabilities of one party winning or another? So we looked into that. We thought that we put about a 62% chance that the Republicans will control the House and the Democrats the Senate. That's a recipe for gridlock, right? About a 40% chance of the Republicans controlling both, and really no chance whatsoever of Democrats controlling both going forward. Now they got to do something, and you have to admit, whether you're a Republican or Democrat or in between, as I am, they've lost. They have no momentum. There's no energy in this administration. There's no mojo. You know what I mean?
Nothing.
And nothing. And we want to see a little bit more. And you can say Biden's doing quiet leadership. These calls with Xi and China and Putin and that kind of thing. And those are necessary and good. And we're encouraged by that. But we just want to see a little bit more of an American mojo going forward. We're not retreating from the world. We're not. The government might think we are, and the media might want us to, but you know what, Ed, we're heading out there. We're getting plane tickets. We're heading out there. We're getting stamps in our passport. Let's go.
No doubt about that. No doubt about that. Anything else, Joe, to end us with today? Your thoughts, your final thoughts.
My final thoughts is we're going to have a great year. Yesterday, I had a valuation discussion with one of the big New York banks on a company that we're considering taking public, right? And it's a portfolio company. We like it a lot. We think we're onto something. And the guy said to me, he goes, "Man, I'm telling you, this is a great value proposition. I love this deal. It's going to do great." And I just said to him, I said, "Listen, it's January 3rd. Everybody's an optimist."
That's for sure. That's for sure.
So let's just keep that energy and that optimism going through at least the first quarter, and see where we're at and move from there.
See if we get a little January bounce like we usually do. There's some selling going on at the end of December, and some stocks are actually, a lot of stocks actually. You have a lot of stocks, few stocks that did very well last year, but you had a lot of stocks that didn't do so good. They were more flat, and some of those were taken down for tax loss selling and whatnot at the end of the year. And we'll see how the first couple of days come along, and we have the usual January bounce we've had in the past.
Yeah, no, I yesterday was a good day. I haven't really checked in on how things are progressing today, but there's still, the theme for me is too much money chasing too few stocks. And so there may be some frothiness at the top, especially in the tech sector. But there's some value plays for sure. And, that's what smart guys like you do, Ed. You find those stocks and, you beat the hedge funds.
Joe, thank you very much for being with us today. Look forward to talking to you soon. And remember, listeners, any questions about anything, feel free to give me a call, 518-255-8854, or you can email me at edgardner@cutterco.com. And remember, any former interviews, you can always go on YouTube and search YouTube, Money Nation on YouTube. Thanks, Joe, for being with us. Have a great day.
Thanks, Ed.
And have a great day from Money Nation. Thank you.